Hello and a very warm welcome to the third quarter FY23 press conference of TCS. Wishing everybody a very happy new year. It's a tradition now, so we have a hybrid press conference. We have journalists joining in Mumbai, and we have all our friends from the media joining online, and several who won't be asking questions are joining across the world. And on our social media platforms. If you want to catch that, please see our LinkedIn, Twitter, as well as YouTube pages. For now, let's introduce the management. We have MD and CEO, Rajesh Gopinathan, COO, NGS, Samir Seksaria, CFO, and Milind Lakkar, the CHRO. As always, we start with the opening address from the CEO. Rajesh, over to you.
Thank you, Kritika, and once again, a very happy new year to all of you. Thank you for joining us. Let me quickly start with our numbers. We have had a very good quarter in a seasonally weak quarter. Our revenues grew by 13.5% on a constant currency basis. Translates into 19.1 in reported revenue terms, crossing 58,000 crores in rupee terms, and importantly, a big milestone for us, crossing $7 billion in quarterly revenue in Q3. Importantly, this strong growth has come with increasing profitability. We have registered 24.5% profitability for Q3, and that translates to 14,284 crores in terms of operating profit. Net profit has also grown sequentially by more than 400 crores, getting to 10,846 crores, and at an EPS of 29.64. Our profit conversion or cash conversion of net profit continues to be very strong. We have converted at more than 104%, with cash from operations of 11,154 crores. The board has declared interim dividend of 8 rupees and a special dividend of 67 rupees, bringing the total dividend declared in Q3 to 75 rupees. With that, our total payout to shareholders by today will be about 33,000 crores, of which about 28,000 crores will be from what is going to be paid in this quarter. Our performance on both on the revenue side as well as on the profitability side is also reflected in our strong customer portfolio. Our number of customers from whom we make more than 100 million rose by 1 to 59 customers on a year-on-year basis. The growth has been led by our significant investment in talent development through the year. As you know, we had hired significantly in the last year, and that has been the basis of our growth. We have been able to leverage that investment, and our net headcount addition this quarter now is at about 57,000 on a year-on-year basis, bringing our total associate count to slightly under 6,14,000 people. Our attrition, as we had called out earlier, has peaked, and I'm happy to report that on an LTM basis, now we have started ticking down, coming down slightly lower than last quarter at 21.3, and we are quite confident of this trend continuing and more significant reductions in the quarter ahead. Our focus on innovation continues to be very strong. We have been reporting to you the number of patents applied. Today we have 7,134 patents applied, which is an increase of 738 on a year-on-year basis. Even more importantly, our total patents granted has now grown to 2,694 patents, which is up at 493 patents on a year-on-year basis. I've said this before, but it's very important that our patents granted now is running ahead of 1 patent a day on a calendar day basis even. We are very proud of the tremendous impact that our R&D team is having. both in terms of the dedicated pool of about 7,000 researchers that we have, and even more so in the widespread adoption of the research and innovation culture across the wider TCS population, and as supported by our ongoing investments, not just in R&I, but also in creating the right enabling infrastructure, least of it not being the pace ports that we are continuing to open across the world. Coming to segmental performance, revenue growth once again has been led by strong growth in North America, growing at 15.4% on a year-on-year basis and getting to $3.8 billion in reported revenue. UK is a market where we continue to enjoy strong growth in a very challenging environment, and UK also has grown 15.4% on a year-on-year basis in constant currency terms. Europe, despite challenges, we have been able to maintain a good growth rate with a year-on-year growth of 9.7% in an extremely constrained environment. The segmental performance from a vertical industry perspective has been led by verticals like life sciences and healthcare, which have grown at 14.5% on a year-on-year basis, retail at 18.7%, manufacturing has also had a good quarter, and BFSI has come in at 11.1%, getting close to 2.25 billion in overall revenue terms. So that's the wrap on the numbers for the quarter. In terms of overall demand trends, I think the quarter has been and continues to be about different markets behaving differently. North America continues to remain quite vibrant, and overall the economic stance and customer perspective there continues to be quite supportive, if cautionary. UK is, as I said, a challenging operating environment, but our solutions are finding a lot of resonance with customers, and we are significantly gaining market share in that market and continuing to do very well. Europe is the market where client decision making is getting impacted by the ongoing geopolitical challenges there, and requires close watching in terms of how it progresses through the quarter. Otherwise, we are quite happy with the performance, and thank you all for listening in, and we'll open it up for questions from here. Thanks, Kritika.
Thank you, Rajesh. So we start the questions from the journalists present with us, and then we'll get a couple of questions from the journalists that are joining in online. So we start with Sajid Mangat, BQ Prime. Sajid, 2 questions, please.
Yeah, I'll start with 2 questions. Happy New Year, Rajesh. Can you take us through the demand environment? You spoke briefly about it, but in your commentary you mentioned about short-term uncertainties. When you look at it from an October point of view and now in January, how have you seen that moving from uncertainty point of view? Is it now you think that it's coming to an end and you have much better visibility on that? Secondly, growth rate. Bill to book, I think you have 1.1. I think last quarter you mentioned 1.2, if I'm not wrong. Is orders coming in a little slow? Coming in, you got $7.8 billion, but is there a slowdown which is happening in closing the deals which is there? For Samir, on the margins front, 24.5%. Do you see much headroom as you go into that? The pressure of wages and talent, has it come down significantly for you and for NG? Can you give a bit more on the BFSI space, how it's looking in the US especially? And HR account, negative 2,000 net account. So what went into that?
All right, Sajid. I think the demand and the pipeline is so overall demand scenario has not changed significantly. But to be fair, it would take at least a couple of months more for us to actually know what the decision making is. We have gone into December with everybody being cautious. But our view is that this caution has different color across markets. So if you look at Europe, there is obviously a real big issue out there and it would take some time for this caution to dissipate, and we need to be cognizant about that, and we'll see where it goes. But if you look at North America and UK, which together constitute about 2/3 of our revenue and probably 3/4 of our profit, the environment there is very different, very supportive. North America, while this quarter and probably maybe the start of the year might be a bit cautious, but our own view is that into the year, we should see a fairly positive one because there is no structural challenge there. Of course, this is subject to how the whole inflation scenario plays out. But on our one-on-one conversation with clients, we think that this is a caution that is more in terms of being wary and taking a decision slightly delayed rather than anything comparable to Europe. UK, the environment is challenging, but given the fact that there is no immediate flip there that is expected, customers and industries have moved forward in terms of the decision making and are committing to large scale, sometimes cost transformation, sometimes more structural transformations along the lines of what, for example, the deal that we have announced with a leading telecom provider there. So UK, though the economic environment is bad, the decision making is much more decisive and much progressing well. So we are participating in that. So that's the spectrum of demand that you see. And the pipeline also kind of reflects that. 7.8 billion is right in the middle of our target range of about 7 to 9 billion. So it's not bad in itself. Sequentially, it is down a bit. On a year-on-year basis, it is growing. But if you compare it against our dollar growth rate on a year-on-year basis, it's a tad lower than that. I think that's a good reflection of where the scenario is, that in terms of the overall demand.
On the margins, we started this year at 23.4% after giving a full cycle of increments. And then we have made good incremental progress so that during the last 2 quarters. We are ending Q3 at 24.5, and we are very focused on exiting this year at the same margin which we exited last year at 25%. On the wage front, the supply side challenges abating is definitely helping out, because more so on the elevated expectations of salaries and the backfilling retention expenses, that having come down is definitely helping on the margin side.
Yeah, BFSI has grown well. It's about 11% year on year in this particular quarter. Even by the deal momentum, $2.5 billion of deals is coming from BFSI. Overall, there's nothing to specifically call out, especially, more than what Rajesh had pointed out. The decision making in sometimes, is getting slightly, delayed, but then there is nothing to call out as a worry at this point in time. And going by the interactions that we have with our customers, they're all engaged with us in doing multitude of projects. Some are technology transformation, some are related to regulations like data localization, large scale payment restructuring, payment re-engineering, those kind of aspects. So, I think there is nothing to call out, whether it is in the North America or UK or Europe. Seasonally speaking, this quarter we had certain furlough impact, more in Asia Pacific than in other parts of the world, but nothing special to call out. It's more or less the same that we typically face in this particular quarter, right?
Was the furloughs higher than a normalized level every year?
No, I think it's comparable.
Sajit, you are aware that we made a significant investment in hiring fresh talent last year as well as the last 2 quarters of this year, and also significant investment in talent development of these people to make them productive now, and that investment is now paying off. Coupled with all the tightening which was talked about earlier by Samir, all of that together basically resulted in a negative headcount. but that does not indicate anything on the demand side. Demand is high. We're just operating it very efficiently right now.
On the absolute level, are you putting more people back on the operations because you had a good, on an absolute level, the bench was high for you?
Yeah. Bench was high for us, and then we were obviously getting also people in the last couple of quarters. All of that together, we are putting more and more people, making more and more people productive and putting them on project work.
Reema Tendulkar, CNBC TV 18.
Good evening, gentlemen. Squeezing in a lot of questions here, so apologies in advance. Rajesh, first question is on client budgets. Are they closing on time? Is it increasing, decreasing, the reprioritization that we're seeing? Second, on sectors. Last time you had called out PNC insurance, the discretionary spend in retail. Can you tell us any more sectors where you are seeing some headwinds or caution emerging? And just to take forward the statement that you made, looking ahead and beyond current uncertainties, our long-term growth outlook remains robust. How long do you think this current uncertainty, if we are in a demand down cycle, will it be compressed? How long do you expect that to last? Samir, do you maintain exit margin range of 25% for Q4 FY23 that you had guided earlier? And despite a very strong top-line growth, if you could tell us why was the margin expansion capped at 50 basis points this time? And your peak margins were 26.85% post-COVID. Do you have the visibility that you can get back to that? Because you are talking about steering your profitability towards your preferred range. NGS, is there a risk of deal wins going below your range of $7 to $9 billion? In the event of a macro uncertainty? And if you could talk about the deal cancellations, are they closing on time? And Milind, has the attrition has come down after 6 consecutive quarters of an increase, but not significantly. So has the easing of supply side been up to your expectations or a little slower? And if you could guide a little bit more on attrition. Thank you.
All right, we'll try to remember everything and answer it. In terms of vertical industries, I don't think there has been any major change in what we have said. So if you think about it, actually what we had said was that we expect this time that manufacturing will be where the impact will come. So far manufacturing has held out. It has not been as impacted as we had originally thought, let's say 6 months back. So we need to wait and be cautious about it, but it's a good thing and we are participating well. So, so far manufacturing is holding out well. BFSI, as NGS said, is growing well. Within that, insurance is slightly weaker, but there's not much to call out on that. And I don't think there is any specific trends there. Retail, when we look into the market, especially if you look at North America, retail sales into the holiday season have been quite strong. Retail profitability has been impacted because of overall cost increases, and they're not been able to pass on all costs to the customers. So the retail industry will go through various transformation initiatives, I'm sure, and we should be able to participate well in that. But net, actually the holiday volumes, even adjusted for inflation, has come in higher than last year. So the industry is in good shape. We'll have to they have to work through the cost implications. So net, so that's why. So if you think about it from a structural perspective, with the focus on US as a more stable economy, we think that barring the current extreme focus on the economic environment, structurally most industries are in a good shape, and we are well positioned to participate irrespective of where the focus is, cost or on the growth side of it. UK I already answered when I spoke about Sajid, and Europe is very difficult to call. So as of now, we don't have visibility as to what the final decision on the budgets are. That visibility will emerge later in the next few months as actual project releases come. But what I just explained to you is based on client commentary going into the holidays. So the distribution that I told between.
Client budgets getting delayed in terms of closure?
We'll get to know that as we No, it is a normal cycle that we get to know of it only during the course of these 2 months, because as you see the project releases and what happens, so towards March we'll be in a much better position to talk about where we see the pipeline. It's first week of Jan, there's not much of early indications, people are just about coming. So that's the spectrum of, you know.
And how long will the tech down cycle last? Is the current uncertainty?
The current uncertainty again is market specific. The US should resolve itself very fast, because you know, we should know quite soon which way it is heading. Europe, nobody knows, and the UK there is no uncertainty. The medium-term environment is well understood, and companies are moving in that based on that decisively. So different markets have different time frames.
Coming to margins, yes, we are absolutely focused on exiting Q4 at 25%, which is exiting the year at 25%. And there would be puts and takes in terms of how it plays out, how the quarter plays out. But as a management team, we are absolutely focused on that. Coming to Q3 margins, we had a 50 basis points improvement. And as I mentioned, we have been progressing steadily on our target range. In Q3, we had 70 basis points coming in positive from currency, and additionally we had 30 basis points coming in from execution rigor, mainly on account of better utilization, realization, as well as reduction in fees to external consultants on a net basis. And this was offset by higher project related third party cost and increasing cost of return to normalcy. And I think last question was, when do I get back? So our first target, we'll take it a step at a time. We'll get to 25%, and then we'll try towards getting to our comfort band as soon as possible.
See, overall, the deal momentum, the deal pipeline looks really good, and our qualified pipeline has actually gone up. Okay, both in terms of medium to small deals as well as the large deal pipeline. So on that count, you know, I have no concerns, right, where we are today with respect to the deal momentum. And at this time of the year, every year, where we are comparatively, we are feeling there's a feel-good factor about it. Nothing else to really call out, you know, pretty much. And then, you know, the tech spend per se seems to be intact from my perspective, because you have this, you know, cloud-related investments that everybody is doing, right? It's actually a race to the cloud, as somebody told me. In that context, that, you know, it's really, you know, people are looking at not stopping it, but then looking at cloud 2.0, and then see how we can progress with the Horizon 2, Horizon 3, specifically, you know, how we can employ machine learning, AI, etc. on the edge. So those kind of investments, I don't think that they're going to stop and start again. You know, that kind of a thing is not affordable. So from that perspective, I think, you know, the deal pipeline, the kind of thing that we are working on, gives us a feel-good factor.
And is there a risk to your $7 to $9 million margin range?
I don't think there is a risk to it because of the pipeline that I see, barring the uncertainties that you see and we see and what Rajesh articulated. Yeah.
I think based on the way LTM is calculated, yes, it has come down by 20 basis points. But, you know, if you look at our quarterly annualized attrition reduction, it has come down to nearly 6%. Quarterly annualized attrition reduction is it has come down by 6%, and that is as per our expectations.
Thank you. Anisha Jain, ET Now.
Hi, good evening, gentlemen. Rajesh, with respect to FY24, do you expect the momentum and the double-digit growth to continue in the absence of, let's say, the mega deals, etc.? And secondly, on BFSI, while you have flagged out that insurance has been a tad bit sticky, it's been coming off from, let's say, 14% in Q1 to 13% in Q2, now to 11%. What are the chances it will be single digit in the coming quarter? NGS, as far as the furloughs that you talked about, they were slightly higher than expectation than in the Asia Pacific region. Is there any reason to believe that it will have any kind of execution impact in Q4 as well? Because a lot of markets do have extended holidays in Asia in the Q1 of calendar year as well as the nature of the deals. If you can talk to us about. Is it largely vendor consolidation and cost takeout kind of deals that you're seeing in the pipeline, and any mix with respect to large deal, mega deal versus smaller deals? Samir, the question to you on the margins has to be that the levers will ultimately come from the supply side only because pricing has become a challenge. Is that the case? That you are mostly seeing the levers coming in with respect to a wage being now settled and attrition being settled, etc. And Milind, of course, the question to you is, this time it was a blip in the headcount addition per se with a negative figure, or is this something which you have factored in for the rest of the year as well? And if you can give us the headcount target for the entire year in terms of the addition, what does it stand at?
So why don't we answer in reverse? Milind, you start.
Okay. All right. So I'll also answer your questions in reverse. So we have added close to 42,000 trainees, fresh campus hires so far, and I think that number will remain, or maybe we may add a few thousand here and there going forward on that one. With respect to addition, basically, like I said earlier, this is all very well planned from the beginning. We have basically been invested in hiring fresh talent and training them for good 6 to 9 months before making them productive, and that investment is now paying off. So it is not. I will not call it a blip. It is actually a planned way of doing it, and we'll continue to optimize it going forward as well.
So in Q4 also the hiring is going to be a bit muted. That's
I'm not going to.
1,000 for the year.
Few thousand. We may go with a couple of thousand plus, or maybe even go muted as well.
On the levers, basically, your question was that will it be only supply side levers? We'll try to pull all levers as possible.
Have all the levers with respect to pricing? Is it becoming more difficult?
Let me finish. Yes, absolutely. See, pricing is always a lever. How much are we able to put on it, and that's a call which we need to take. Pricing, we are getting it on a case-by-case basis. Yes, with the inflation scenario which the world has seen, probably we would have wanted to push it even further. That has not happened, but that definitely remains a lever.
But just to add there, are you getting the new deals at the price points that you want, or is it becoming a lot more competitive and pricing is becoming a challenge even in new deals?
So it's a combination. We are getting deals. The new price points does get factored in. Cost and optimization deals would be competitively built versus sole source deals and the digital transformation deals. We have an advantage.
I think the question on furloughs, I think there is always certain amount of furloughs in certain markets actually fall in Q4 as well. So it's, I think, expected lines, nothing specific to call out, and we're not seeing any abnormality per se over there, right? Second is in terms of mixture of deals and deal pipeline, vendor consolidation and cost and optimization, that kind of opportunities are there definitely, and it's a mix of both cost and optimization as well as growth and innovation led deals, and it's the mix of the percentage of how much of it is in cost and optimization, how much of it is in I think it's along the expected lines and where we want to be, right? We want it to be, and I think it's looking good. There are no concerns per se. There are several large deals in the pipeline, and it's a mixture of it's broad based across markets, across verticals, right? And nothing to specifically. I think it's more or less in the same levels. I don't think in terms of the number. As well as in terms of the overall value, I think it's comparable.
Following up on that one, actually our realization both on a quarter-on-quarter basis as well as on a year-on-year basis is actually improving, and we expect that trend to continue in the near term also, because pricing takes time for it to get factored into on the realization side. Coming to the larger question, as you know, we don't comment about things, so it's a bit of a. We'll need to wait and see how this will play out. This year is in a good shape, and as Q4 unfolds and we have better visibility on what the demand trend looks like, we'll be able to at least give you some directional commentary on it. But we'll go back to what we have all said in the last 6 months, and we maintain that medium term in US and UK, we have very strong confidence. Europe is difficult to call, and US and UK accounts for about 2/3 of our business. So we are quite comfortable. And in Europe, we have a very strong presence on the ground. So we should be able to navigate it, and on relative basis, we should be able to navigate Europe well compared to all other players. So we are confident about our ability to play Europe as it unfolds. What the numbers will be, we'll have to wait and see.
No, just the reason I asked you that, Rajesh, in our last conversation, you did say double-digit growth in FY24 is achievable, not just aspirational. So you do stand by that?
I don't specifically, I shouldn't have said things like that because we don't give numbers. It is, if you say FY23, definitely. It's much closer to that.
One quarter left, sure.
We'll take all the other questions offline. Anisha, Harshita Sawant, CNBC Awaaz.
Good evening, gentlemen. I just want to understand, Rajesh, a couple of quarters back, digital transformation was very large for you guys, and that's what clients wanted, and that's where the deal flow also came in. Now, as recession fears are picking up, especially in the US, and you say you have no certainty on Europe either, how have the client needs changed? Where is the business coming in from? NGS, a lot of banking clients have said that a lot of banks, in fact, in US have indicated to massive layoffs in the coming quarters. And these are the big banks. How does that impact demand for you? Is that an opportunity, or do you think business could slow down? For me, I'm just confused as to what I should be asking Milind, because he's basically given us an outlook as to how muted the hiring could be. But what is your sense of hiring in the coming fiscal? Is it going to be as strong as it was in perhaps FY22-23, or it's going to taper down because supply side challenges aren't as important at this point in time? And for you, sir, you said higher third-party costs still exist. When you don't have as many supply side challenges, why is work being given to these third-party players, and how soon do you see them tapering down?
Actually, can I add to that question? Why are you looking at a workforce reduction if higher third-party costs are still weighing on your profit margin?
So let me take that first and explain. See, our fees to external consultants has gone down, and if you look at it from an absolute perspective also, it is almost flattish. What I meant by project-related third-party cost is what we call out as equipment and software costs. So it is more linked to project-related hardware software costs, not in terms of external consultants.
No, but also, Harshada, a lot of it comes from on-site, and that's more a factor of how travel opens up, and we need to bring in supply into that local market. And that market still continues to be supply constrained, and that supply side is only opening up now. So a lot of that cost base is actually on-site cost base rather than offshore cost base. So during the course of the year, you should see that coming off, right? Because that supply is easing, but it has time. That answers your question also, because these are different regional ones. Continue. Visas will be there, travel will be there, local hiring there will be, but local hiring, we expect on-site local hiring to ease up given what has happened in the last 3 months or so. So we should see a substantial or a systematic reduction there.
Are you expecting any significantly higher costs on visas? I mean, I know it's a very...
No.
Nothing significant. Nothing significant at this point in time.
How has client demand changed? It's not digital transformation now, but what is it that the client expects from a company like TCS at this point in time?
It will be a lot more, okay, that was your first question, a lot more balanced in terms of cost optimization, cost-based transformation deals, and that of course varies by market. So we expect this year to be a more balanced year in terms of the nature of the demand also. And you started, huh? Balanced is what I expect. And you started by, I thought you started your question saying that even Europe, it's not quite, I mean, US is not the benchmark and even Europe is not in. Europe has a problem. US, whether it's a real problem or not, I think time will tell. Our own view is that it's a transient one. There is no structural problem in US, and we are quite positive on the medium term. The immediate short term is difficult to call. We'll have to see what will be. But US, we are quite positive. Europe, something needs to happen for it to turn around. So Europe is a more difficult one to call, but US, we are quite positive about it. Given that construct, the focus, for example, in UK and all are more cost transformation deals, more some cases business transformation also. The US is a much more diverse set. A lot of work is also happening on cloud, because a lot of investments have gone into the cloud, but to realize the promise of cloud, it requires a lot of heavy lift to happen. So though it's not on the headline and it is not in terms of incremental dollar sale of cloud companies, but from actual project work related to cloud, there is quite a lot of work yet to be done, and we are very strongly participating in that. That you can consider whether to call it digital transformation or not, but it is truly transformative, and that will continue through the year, well into the year. So,
okay, overall on the US banking side, right? We also read the same commentary, but then as I see it, the tech spend seems to be holding up, and specifically in terms of the large and deals related to cloud transformation, etc. But having said that, look, certain areas like mortgages or insurance as it applies to PNC, in these areas we see some weaknesses, and consequently some of those reductions that the banks may be planning with respect to how exposed they are with respect to some of those aspects. We see that there is the capital market side of it, the trading side of it is looking good. Customers are actually doing more in those areas. Wealth and retirement space, again, people are looking at technologies to see how they can bring in a lot more automation, a lot more efficiency. So it's a very, very well-rounded thing. And if you take financial services, you have banking, capital markets, insurance. If you put all the three things together, there is a self-balancing effect. If one portfolio does well, another one may have some challenges. But overall, it balances out, and I'm not able to call out anything specifically at this point in time. Except that, look, they are looking at cloud in a big way. They are looking at automation, adopting newer set of edge-oriented technologies, and then data localization, as I called out. Some of those issues are data anonymization, data privacy-related things. Those investments are continue to happen.
Dibangana Ghosh, Money Control.
Ashwada, I need to respond to your question.
Yeah.
I'm sorry if I think we had 500,000 registrations on our NQT we just concluded just now. So, close to, while not giving a guidance on this, but in general, we normally hire 40,000 from the campus every year. I don't expect that number to change in the next fiscal year.
Dibangana?
Yeah, since most of the questions have been asked, so I'll start with Rajesh sir. Sir, from an industry perspective, JP Morgan has already said that they expect the IT growth to come down to 6 to 8% in FY24 as compared to the mid-teens it's right now. So, wanted to get your outlook and view on that. My question to Milind sir, obviously, I mean, the headcount has gone down this quarter, and this is the first time happening in 10 quarters. Attrition is down. is this an indication of demand softening to some extent? And NGS sir, we have seen the vendor consolidation happening right now, and managed services deals which are coming at slightly lower pricing is something that we are seeing. So happening more right now. So will this impact the margins to some extent eventually? So this is for NGS sir and Samir sir both.
We make a commentary, then analyst makes a commentary. Then if we start making a commentary on what the analyst commentary is, this will become a never-ending loop. So we have no opinion on any analyst commentary. I told you about our view that in the markets that we are operating in, it's a very diverse outlook right now. And we are constructive on US, we are cautious on Europe. UK we are positive, but we acknowledge that it could be volatile given the challenges there. Within that, we need to go out there and play each ball on merit. And I think what's important for us is we stay close to the customer. The macro view is fine, but end of the day we got to deal with it on a customer by customer basis, and no change in that. We are, our posture is positive. We are not pulling back. We are not cutting. We're not pulling people off the field. We are fully engaged, fully present. We are fully invested from a talent capacity perspective. We had over-invested last year and benefiting from that. And even if you look at our overall hiring trends, we are continuing to probably at the same level. So we should be hiring in the range of 125, 150,000 people next year. So it's a ongoing confidence in that medium term, long term view that we have. Short term, how it plays out, I think we have no opinion on it.
Yeah. See, as far as the managed services type of deals are concerned, I think we have a very large portfolio of clients, right? About 1,200 plus clients with whom we have built a very lasting relationships, and what we work with them is a portfolio of programs. Some are on managed services, some are otherwise. Managed services, your observation may be right in terms of saying that, look, does it come at a price point which is lower? But it's a question of what value you are giving finally. And managed services by definition also gives us a lot more flexibility, right? To execute a lot more automation that we can do, and a lot more the parameters that constitute the execution of the deal are something that we manage and we execute for an outcome, right? From that basis that, look, overall over the lifetime of the deal, it has to deliver better margins for us, and that's something that we are very focused at the time of deal construct, and the way that we execute all relates to this. So per se, I think it's not correct to say that, look, if you really go in for a managed services type of a deal, it will have an impact on overall margins, right? I mean, that's the take on it.
Yeah, like Rajesh said, our investment in hiring fresh grads last year and last 2 quarters of current year, and coupled with very rigorous talent development, that is one parameter. And second is the efficiency in our operations, driving efficiency in our operations, resulting in this negative headcount. It has got nothing to do with demand capture as such.
Ekta Suri, Zee Business.
गुड इवनिंग जेंटलमैन। राजेश सर, मेरा पहला सवाल आपसे होगा कि नंबर्स जो है ये एक्सपेक्टेशन से बहुत ज़्यादा बेटर हैं, तो इन नंबर्स में किन फैक्टर्स ने मदद की, या फिर आपने ग्रोथ आप आने वाले दौर में कहाँ देख रहे हैं? इसके अलावा यूएस और नॉर्थ अमेरिका और यूके ये भी इन नंबर्स में एक सब्सटैंशियल पोर्शन देख रहे हैं हम इनका। आप आने वाले दौर में यही मोमेंटम देख रहे हैं या आप इसको गिरता हुआ देख सकते हैं, क्योंकि हम ग्लोबल स्लोडाउन की यहाँ बात कर रहे हैं? और आपकी ऑर्डर पाइपलाइन FY24 के लिए क्या होगी? मिलिंद सर, मेरा आपसे क्वेश्चन ये होगा कि एट्रिशन रेट जो है वो उसमें सुधार आया है, क्या हम इसको एक फैक्टर ये भी मान सकते हैं कि बहुत से जब हम फंडिंग विंटर की यहाँ बात करते हैं, तो जो बहुत सा टैलेंट स्टार्टअप्स की तरफ जाता था, अब एक ट्रेडिशनल जॉब की तरफ ही उसका झुकाव हो रहा है, क्योंकि ग्लोबल स्लोडाउन की बात हो रही है, स्टार्टअप्स के बाद फंडिंग की कमी है, तो ये भी क्या एक फैक्टर हो सकता है?
Right, I'll start. In terms of where the demand has come from, where the outperformance has come from, we have had good and strong performance both in US and UK, and also markets like India, so which has also done very well for us. So it has been an overall good performance. If you look at in terms of the nature of that demand, it has been quite a lot of business coming from transformative engagements. Cloud transformation continues to be a big driver of the demand. As I said, while overall incremental cloud consumption might be challenged in the overall market, we are seeing in our client universe long-term commitments to cloud transformation journeys continuing, and we are participating very strongly to actually execute on those cloud transformation journeys and to make them real and to to deliver the business cases on which these transformations were originally predicated. So that's what is driving this growth momentum. Visibility into whether this will continue or not, I think that's what we have been discussing, nothing further to add to it. North America, we do believe that there is no threat of a large-scale economic recession. If anything, it will be more a technical one, and we should see good participation in the overall economic activity there. UK, we are participating strongly. We should continue to do that. But given the overall scenario there, it's very difficult to predict how long will that continue and what will it be. Europe, we need to see how it plays out, and the rest of the world is volatile by nature. So overall, that's the commentary I would give. Yeah.
एट्रिशन के बारे में दो फैक्टर्स नॉर्मली प्ले करते हैं. एक तो आपने बताया वही मार्केट फैक्टर्स डेफिनेटली प्ले अ रोल, और दूसरा हमारा खुद का जो हम एंगेजमेंट करते हैं हमारे एसोसिएट से, वो भी इक्वली इम्पोर्टेंट है टू अरेस्ट एट्रिशन. वो हम काफ़ी महीनों से कर रहे हैं, उसके कुछ रिजल्ट्स अभी आना चालू हुए हैं. तो मैं कह रहा हूँ दोनों फैक्टर्स प्ले करते हैं.
अगर हम BFSI सेक्टर की बात करें तो बहुत से बैंक्स, इंडियन बैंक्स जो हैं, उनका टेक की तरफ झुकाव बहुत ज़्यादा हो रहा है, और AI, मशीन लर्निंग, DL, इन सब के बावजूद मेटावर्स एक टर्म है जो इंडियन बैंकिंग सेक्टर के लिए बहुत सामने उभर कर आ रही है. आपने ऐसा कोई शिफ्ट देखा है इंडियन बैंक्स की अगर हम बात करें?
I think I've seen some of those trends. Some of the banks are doing some pilot on metaverse. But then current focus is really, most Indian banks today, if you look at it, they're all having on-prem their own data centers. So they are considering movement to a cloud as a first step. The second thing that they're also looking at is within the infrastructure that they have, how do I embrace more of automation, more of analytics? How do I leverage the value in the data? Those kind of projects are happening. Third is that the digital investments or digital play that the banks have in India is probably the biggest and nicest in terms of the outcome delivered in the market, even when you compare them with respect to the global banks, right? So the whole world is looking at the digital banking and the digital payments and the whole India digital stack that has evolved in India. So in that context, I think a lot of investments are happening on cloud, artificial intelligence, machine learning, and data related, analytics related investments, and also integrating a lot of startups and fintechs that are emerging from the Indian market, the Indian ecosystem. Metaverse will be a pilot at this stage, but I think it will take some more time before that is put into productive banking use.
Thank you.
Thank you.
Ramita Mazumdar from Economic Times.
Hi, hello gentlemen. I think my first query for Rajesh will be, in terms of, because we have talked about large deals still being in the market, are we going to see the large deals that come into the market in 2023 to be more on the renewal side, or will we see any net new, absolute new deals coming in over here? Also, how much of an emphasis are we going to see purely on, the lowest pricing when it comes to going for these large deals? That is for you. For NGS, I have in terms of, the new business structure, if there's anything you can share in terms of how it has been doing, and also how much of the cloud growth that you're talking about, how much of it is, flowing in through these new operational structures, especially enterprise growth and the business transformation group. And for Milind, if you could give us the number of freshers that have come in this time. And also, I wanted to understand, is lateral hiring on a pause right now? Is that something we are going to see for the next couple of quarters as well? So that's all.
Right, Ramita, I think the best way to answer it is if you go back to the deal that I spoke about in UK. It's a deal with British Telecom that we announced. If you look at the construct of the deal, on one side, what we are doing is we are actually taking over the entire maintenance of their existing estate and freeing up their capacity to drive a very accelerated transformation on the digital and cloud side. We are also participating in helping them, but our domain knowledge, our contextual knowledge is actually giving them the confidence to be able to move their SMEs onto their transformation journey. Now, you could look at this deal in both ways. Is it, is it about an existing set, or when you look at it in its entirety, the transformation that is actually going on is as much a transformation that is being executed on the movement into the new architecture that they are envisaging, and us being able to play a role in helping them A, free up capacity, and B, participate to make sure that this migration happens and transform this estate in line with that ongoing migration. These kind of complex structures will characterize the deals of that we expect in the coming future, and those are fairly integrated deals. It has got a transformation element, it has a cost transformation element, it has a very strong engineering focus, it has a very strong operations and execution focus. So that's the kind of large deals that we expect more and more to be unfolding as large enterprise, large workloads go down the path of transformation. So each deal will have its own, what should I say, characteristics, but broadly you can think about them as heterogeneous deals which include all value drivers in there, rather than think of them as one single value driver driven deal. Yeah. No, this is being structured as one single integrated one, right? So because it's important for them also to have a partner who can actually handle that scope and scale together, so that we are like completely tied at the hip, because the success of the transformation depends on the success of how this aspect of it is being done, and their confidence in our ability to do it, so that they can move forward into what they are trying to do. Yeah.
And in terms of cost, is it like...
That's why I said, so if you look at this, there is a cost transformation involved, because the legacy cost base needs to be transformed to be able to support the transformation. There is a architecture transformation involved to be able to migrate into the new architecture, and there is a complete new, by the time they are done with it, they hope to have an architecture which will lead to business transformation, because they should be able to decouple their functionality and services inside that stack, so that business model transformation can happen. So it has the full spectrum of transformation from cost all the way to business model.
The 13.5% plus, growth that we have achieved in this quarter is largely pivoted by the demand on the cloud and related areas, related technologies. Okay, so in that sense, that whether it is on our own private cloud or on the hyperscaler cloud, the demand on the cloud side has been quite good, right? As Rajesh articulated, it's not just the cloud, right? It has to bring a lot more of our offerings together, right? In anything that we do today, right? For example, the TCS Interactive on the front end side, that experience design has to come in. The cyber security thing that has to be pitched in, plus the analytics and data related transformation need to take place. The automation and the intelligence layer will have to come in. So several services lines all have to come together to stitch together this large transformation, a large work that we do. And whether it is large or small, invariably, whatever I said, they all becoming fundamental to the architecture in which, you deliver any system today, right? People want that in that kind of a new technology, new this thing, right? So in that sense that, the cohesiveness of the groups that we have right now makes this harvesting and stitching together possible and without any friction and lot more collaboration.
Ramita,
You can wait for some more time, right?
Shivani Shinde. Go ahead. There's just so many guys.
Probably we'll just answer the last question.
Ramita, as I said earlier, I think 42,000 is the number which close to 42,000 is the number of fresh campus hires we hired so far this year. And no, absolutely not. We have not stopped lateral hiring at all. Means we are hiring lateral as per the business demand every quarter, and that goes on.
We're really tight on time, so request everyone to.
Questions from
Yes, Shivani Shinde, DS.
So I'll start with Milind. Milind, 42,000 numbers. I'm still wrapping my head. This is the first time there's a blip in TCS hiring numbers. And probably, Anjay sir, even you will contribute here. Do we see this as an opportunity for TCS to look into the so-called non-linear growth, or is it still non-linear growth? Because you've grown. If we have to still look at the numbers, it's a very strong growth for this quarter. Numbers are down. Do we see this as something which can still go ahead? So if you could add to that. Rajesh, to you, again, a little bit on hyperscalers. Cloud is really growing, but globally there is reports which are saying that the hyperscalers, their numbers are coming down. So if you could throw a little bit color on that. Samir, hedging, do we see anything shifting drastically for TCS?
So I think, Shivani, we are continuously looking for adding non-linear revenue because all the other, our product and platform offerings are driving towards that, and that continues without saying, irrespective of the headcount. So that means while there is some correlation, but I will not completely relate to that. Headcount being negative, I already told you why it is so. I think I don't need to repeat that, right?
So overall, if you really look at the overall IT services market and market share, is probably we are roughly about 4%, right? So there is so much headroom for us to grow in the IT services side, which means that we will keep hiring people, we will keep training them, we will keep integrating them. Today, for example, we have 125,000 plus people who are 10 years plus experienced in the organization. They form the fulcrum. We bring in new people, new talent, integrate them, and execute each of these projects that we contract successfully, right? So that services side of the business, which is really require the people and consultants to execute, and our focus on driving productivity, driving and leveraging our contextual knowledge, all of that is an important element of our strategy, and that cannot that's our breadwinner. That's something that we do very well. That's something that we'll continue to grow, right? The other side of the thing is that, look, yes, while we drive the productivity on the other side, our investments in products and platforms, how can that be one of the levers in contributing to the non-linearity is something that we are extremely focused on. And our platforms business is doing well. And this quarter, for example, our products have really done well. We have announced a couple of large banking deals. Our blockchain-related Quartz program is doing really well. Ignio platform is doing well. So almost all our products and platforms are doing well, and that contributes to a significant revenue on a SaaS basis. And all these products have gone through this transition into a marketplace type of an architecture where we are able to consume external services, our customers are able to integrate it into their ecosystems, and we are able to charge them on a SaaS basis, right? So that's a journey that we have taken, and that non-linearity will certainly kick in as well. It's a long answer, but I hope that I've covered every bit of it, right?
On the hyperscaler side, it's as I said, see, our customer universe is a fairly well-defined one. We are typically focused on large enterprises, and if you look at from their perspective, the cloud commitment is absolutely, it's a one-way street. There is an architecture shift going on, and they're committed to it. They have announced it, signed up to it. So the cloud deals that were announced that are multi-year commitments. Now what needs to actually happen is that the actual enterprise transformation of migrating those workloads onto the cloud needs to happen. That's where our business comes in, and we are very strongly participating in that. I would say that the first 25-30% of that work is done, but now we are starting to touch the core, and that's where we are really very strong and highly differentiated, and that universe is quite limited as to people who have the contextual knowledge, who have the ability to deal with both the old as well as the new, and the engineering capability to move large workloads and to have the ability to stitch together that kind of talent base. There are not many people in the world, and we are very well in this thing. So I'll give you one data point. For one of the top 2 hyperscalers in the world, today TCS drives the largest consumption revenue for them globally among any service provider. So that's that's a measure of how our service line actually depends, and that consumption is continuing, and we are more on that area. So we see cloud for us as a continuously growing service line, and we are not even halfway there in terms of the kind of workloads that we expect there.
Our hedging policy is fairly consistent. We we hedge our forward forecasted revenues and receivables on a rolling 2-quarter basis, and that helps us protect the short-term volatility if it happens. And on a tactical basis, we take a call looking at the risk involved and the cost.
Varun Sood from Mint.
Hi, gentlemen. Sir, any numbers which you can share with us on the cloud part? Because in this quarter also you've said, and you've used very interesting words, propelled by cloud. So would it be fair to say of your $20 billion revenue in the first 9 months of the year, is cloud a $5 billion plus business for TCS? And what is the growth, what you've been seeing? That was the first. If any numbers would be very helpful. So the second and the only question I have is that at least in any difficult or uncertain environment, there is a school of thought that mid-tier and small-tier companies are much better placed, both with regards to growth and how investors also view some of those mid-tier and the small-tier companies. Does TCS subscribes to this, that in any difficult period, larger companies like TCS, Accenture stand to lose? Because Accenture over the last few months has been downgraded by a lot of analysts, sell-side analysts. If not, then what really explains why TCS can continue to record its growth momentum, what it has seen over the last 2 years? If at all we are in a downward or a recessionary environment. Thank you.
Varun, on the first one, no numbers to share. We will not share numbers that are not already out there. So let me answer the second one. I believe that in challenging operating environments, as the actual project scope starts becoming more complex, as the transformation programs start actually hitting the core of the enterprise, where true engineering capability comes to bear, like the example that I gave to both Romita and what I was telling to Shivani. It requires organizations with significant breadth of capability to be able to stand up and deliver on that, and to also for enterprises to have the confidence that their transformation partner can actually stand by and deliver on it. So to quite contrary to the scenario that you described, I believe that actually in a challenging operating environment, full services organizations like us with deep customer relationships, with wide capability spectrum are substantially more competitive on a relative basis than smaller standalone ones. So the rest of it in terms of investor focus, etc., I don't want to comment on. But I do believe that incremental differential competitiveness is actually in our favor in a challenging environment rather than the other way around like you described.
I don't have questions, just a couple of quick clarifications. You mentioned something about realization, Rajesh. I didn't quite fully catch what you meant about that. If you could just elaborate a little bit on pricing and realization. And then I have a second clarification I just wanted help with.
Pricing is what happens at a deal by deal basis.
Sure,
realization is what happens on an average basis.
The trend is what? You mentioned something about realization.
I said on an average, our revenue productivity is actually improving on a quarter-on-quarter basis and also on a year-on-year basis.
Which means higher realization?
Yeah, I said realization is improving, then I changed it to saying revenue productivity. It comes to the same thing.
Same thing, right?
Same thing.
Second clarification I wanted is, you said this is propelled by cloud demand, as Varun pointed out, but also market share gains. Could you give us a sense of your revenue performance, what the quantum of market share gains is?
So in our, quantum we can't give you, but in our, and it actually goes back to the last question
also. Statement by something, right? Like when you say market share gains, can you give us some insight into what you mean by that?
So in the customer base that we focus on, we have seen continuing path towards consolidation of them preferring large strategic vendors like us and consolidating onto us. So that's the market share gain that looking at the spend at the customer level.
Just wondering if you could give us a number for market share.
See, we will not give you a number that is not in our financials, in our earnings call. So, asking it in any way, we will not get you a new number. No, so I was trying to explain to you what that is, but numbers we won't be.
So if I can just ask a quick follow-up to what Menka asked on the vendor consolidation, are you winning more at the expense of some of the large cap IT companies which are not doing well, say a Cognizant, or are you even winning at the expense of an Accenture? I'm talking from your client base, Accenture, Infosys, Wipro. Are you winning in deals compared to some of these companies also? Thank you.
Varun, we are winning on a relative basis against whatever is the spectrum of competition out there. Specifically which competition or the other, that let the results come and then we will see.
Final question from the journalist in person, and we have 3 journalists waiting patiently by online. We'll try to quickly go to everyone. Vivek Kumar, inform us, Vivek, one question if possible, please.
I just have one question. So you talked about client budgets. You said you'll have much clarity in the next couple of months. But I just wanted to understand, is there any indication as to our clients looking at maybe short-term budgets given the macro uncertainty there? And if that happens, in that scenario, what kind of an impact can we see on deal wins?
As I said, it will be better to answer this a few months down. We don't have visibility as to what that's changing. There is no indication that it is moving in that direction. But whether it really happens or not, we'll have to wait and see.
Thank you.
We have Sankalp from Bloomberg joining in from Delhi virtually. Sankalp, you can unmute yourself, switch on your video and ask your questions.
Hi, good evening to all of you. Just 2 quick questions. One is I wanted to ask that in the face of uncertainty in Europe, what is the alternative revenue lines which y'all have to counter that uncertainty there, or any potential fall in demand? And does that also mean that there's pricing pressure in terms of services and products and platforms? That's one. And the other one, Milind, I wanted to ask on hiring. You said that the goal is to continue with 40,000 freshers? I mean, I didn't get that correctly. So again, in terms of the uncertainty out there in the environment, do you continue to stick to 40,000 freshers every year? Those two. Thank you.
Sankalp, the European uncertainty is not of the nature that is immediately going to be addressed by pricing per se. It is more decision making and actual things. So I don't think it is immediately related to pricing. And first part of your question was, I forgot what was it.
I was trying to ask if
trying to balance it out with something else.
No, not on a like-to-like basis. If you look at it from a slightly longer perspective, 3-4 year kind of a perspective, Europe used to be the driver of growth, growing in the mid-teens, and now that mantle has shifted to US, and US is the one that is growing in mid-teens while Europe is, so at a portfolio level it is balanced. Earlier Europe was the growth driver, now US is the growth driver, but these are large markets, you're not going to replace one with the other, you got to play the portfolio.
Sankalp, on the fresher hiring, every year we hire about 40,000 from the campus, and with that in mind, I don't expect that number to change next year. No, at this point in time.
Thank you. Next from Ayushi Kar from Hindu Business Line. Ayushi, you can unmute yourself.
Yeah. Hi, gentlemen. Thank you for a really comprehensive breakdown of your financials. I just have 2 quick questions. So firstly, on cloud transformation or like digital transformation, that you're saying that a lot of your business is being propelled by cloud. Do you think that there is a margin for you to play with pricing and potentially increase that in the coming future? And also, I'm hearing that a lot of because of macroeconomic pressures, a lot of your small or medium enterprises are shifting away from hyperscalers. So what does that mean for TCS's private cloud business? If you could answer that.
Let me answer the second one, then we are not experts on that. So if you look at actual cloud demand in our client universe, that continues to be quite strong. So the large enterprise cloud demand continues to be strong. Whereas if the total demand is going down, then probably it is going down on the medium and the small one. But we don't have direct visibility on it. But we do see that actual cloud transformation projects are progressing, and as I said, they are now in the more tougher part of it. But cloud demand, we don't see it reducing in our client universe, which is the large enterprise. I think the first part of your question was saying that do you see pricing uptick out of the cloud one? As the service portfolio keeps shifting towards the newer service lines, there is that gradual shift in pricing and realization, which we are seeing coming through. So definitely that is there. But it is incremental, and that's one of the things that I said, that on a quarter-on-quarter basis, on a year-on basis, now we are starting to see some amount of small uptick coming through.
And last question from Pranav Kiran from Reuters. Pranav, you can switch on your video and unmute yourself. Yeah.
A very broad question. I just want to return to Europe. With regard to Eastern Europe, I know that you don't really have any Ukraine presence, but maybe you could just give me some color on client decisions about awarding work in that region. Has there been some caution? Has that changed? Could you give me a sense of that? And very broadly, do you expect the Indian IT industry to sort of continue to take share with regard to global IT service spend? And what are our biggest drivers?
On Eastern Europe, we don't have a presence there, so we can't comment on specific client demand for services out of Eastern Europe. I wouldn't expect much to be there, but we can't comment on it. That's not a space that we have been present before, and currently also we're not there. Was that the question?
Yeah. So essentially, we have Hungary and Poland as the development centers. And those development centers, the work that we do continue to grow. And some of our customers in Europe have asked for services to be provided out of, let's say, Poland or Estonia or Slovakia. These are things that, the overall scheme of things, they are not very material, is what I think Rajesh is articulating.
Thank you. Thank you so much, gentlemen. And a big thanks to all the journalists that have joined virtually and in person. Please join us for refreshments. And for everyone that's joining us online, wish you a very happy new year. Have a good evening. Goodbye.